Those China numbers were important, but it was really a non-event for the market. In fact, surprisingly how muted the reaction from the Australian share market to those Chinese numbers, which were better than expected. The Chinese GDP numbers coming in at 6.9%, and the market had been expecting 6.8%. So if we have a look at the market reaction, you can see we saw the numbers out at one, a little bit of a rise, then back down and then back up again, and in the end flat. In fact, the material sector, which you would expect the most impact from, still by the end of the session down by 1%. So not a huge impact there. Where the big impact was felt was the Aussie dollar. If we have a look at the Aussie dollar, you can see that we saw that big jump in the afternoon after those numbers, and we managed to hold on to the gains there. So watching the Aussie dollar, and I guess all up in terms of the market, one of the areas I was watching was gold. Now, gold stocks had a very good week last week. Regis as well as Evolution Mining up around 15-16%. But on Friday, gold prices pulled back, and with the Aussie dollar moving up today, we saw a pullback. In terms of the gold miners, the telecom sector also coming under pressure, down by 2%. Telstra really facing some stiff competition coming in from new entrants like Kogan, which has teed up with Vodafone, as well as new entrants to the market, and one that floated on the market this year is Amaysim as well. So Telstra not doing so well, but the banks, the energy stocks, they all held up fairly well. So altogether for the market, not much of a reaction in terms of those China numbers. I would have expected a bigger sigh of relief given those weak trade numbers that we saw last week coming through from China.
Do you think we see that, Julia? Arium quarterly numbers out. What did you make of them?
Well, the shareholders liked it. We saw the shares jumping a massive 14% today on market. And I guess if we have a look at these numbers, the September realised price that Arium achieved was actually down $4 at 48 US a tonne. Now, that doesn't seem like much, but the one thing that's been moving in Arium's favour is the Aussie dollar. So in Aussie dollar terms, that was just a drop of $1 at $66 in Aussie dollar terms. And given that, the average cost was down by $5 to 57.40 Australian dollars, it means, they're making money on their iron ore, which is always good. So we have seen a lot of bad news coming out of Arium lately, but the fact that they are profitable on the current iron ore price, really because of the Aussie dollar, means a positive reaction. Not only that, they're looking at selling Molycop. This is a mining consumables business, and I would have to say that this is a jewel in the crown for Arium. It's one of the few parts of its businesses which is growing and expected to continue to grow. So the fact that that's on the auctioning block at the moment and looking at a sale there, I guess that could create some value for shareholders as well in the short term.
Mike, a view on Arium, about 3.7%. Julia, your thoughts on the market reaction, whether or not, what the near-term at least outlook for Westpac is?
Well, great performance by Westpac. Usually when you see a discounted capital raising and the stock coming back online, you see a fall, but both Westpac and Treasury Wine Estates doing well today. Now, looking at Westpac, three key reasons why the share price rose today. One, while Westpac has been offline, the other banks have been performing very well. In fact, Commonwealth Bank was up by 3.1%. Secondly, the capital raising was expected and is expected to be the last this year in response to the APRA changes in risk-weighted mortgages. And look, thirdly is in response to what's expected in terms of cash profitability and net interest margins. Look, we saw the cash profit for Westpac up by 3%, but in the second half that accelerated to 7%. Net interest margins were steady, but these are expected to rise because Westpac did raise its mortgage rates by 0.2% on both home loans and investor loans. So that bodes well for its net interest margin going forward as well as profitability. So the stock up by 3.7%. So the fact that we saw the banks doing well while Westpac was offline. Secondly, that the capital raising was expected and now looks like the capital raisings are out of the way. And then thirdly, Westpac also increased its interest rate on its mortgages, and that has positive implications for its net interest margin.
Mike,